What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 31. It's July the 24th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about all of the important levels that we have on our chart today. So I drew this zone up based off of a consolidation area that got established in the pre-market, and then I just extended it across throughout the session as the market opened at 9:30, and it actually proved to be a very critical level. So let's go ahead and get into that. So let's start our analysis today at the market open, when the market opened at 9:30. So just slightly before that, we were in an uptrend, making higher highs and higher lows coming into the open. Once the market opened, the uptrend did continue. We saw a spike to the upside. We pulled back. We created a higher low right here. And then we see prices continue up, but we ran into a little bit of resistance once we hit that 35,500 level. We pulled all the way back to retest the zone, but then we found support at the zone. So that right there is a very important signal. We knew that the trend was already up throughout the day, and then when we did pull back, we just saw prices pull back to retest a level that used to be previous resistance but should now act as support, and that's exactly what we saw. So that served as a very important factor going forward, and it told us that the uptrend is still valid and it is still pretty fairly strong. Not pretty strong, but fairly strong. So after we bounce away from the zone and find support down there, we continue up to make a new high for the day, and then from that point forward, this whole little junction is what led me to trade one. So let's go ahead and dive into that and really discuss these higher lows. So we see prices pull back from this swing high, and then at this point they created a higher low once they bounce back. Now what's really interesting about this is two things. One of them is the fact that the wick for the higher low is so much further away from the body. That's number one. And then number two, the fact that we established a higher low right here on this candle, but then on the next candle immediately after, we established a lower high. So in essence, we really created a symmetrical triangle. And when it comes to a symmetrical triangle, prices can really move either way, but it depends on the market scenario that you're trading in. If the market scenario was up at that time, you more so want to lean towards the trend that's already been established. So that's what I was thinking about today when it came to trade one. Now, you know me, I like to use my higher low strategy. So whenever I see a higher low get formed, I circle up my higher low, and then I draw a level of support based on the lowest level of the wick for that higher low that got established. Now in this scenario, I didn't necessarily put my level of support all the way at the bottom of the wick, because the wick was so extended that I figured that sometimes if the wick is too far away, you won't come all the way back to test that wick, but you will come close. So that's why I ended up putting my line about maybe 3 to 4 points above the lowest level of that wick, so that way if prices came back, I wouldn't miss out. And if you look at my entry right here, I went long at the blue triangle, and I pretty much got in almost at the last possible price that I could get in without missing out on that move back to the upside. So that's the biggest reason I do that right there. It will be occasions in the market where that higher low does come back to get tested almost to the wick, and that's actually what happened a few candles later on this candle right here. Notice how it came all the way back to retest that wick. So it'll be a lot of occasions where that retest does happen, but there will be some times where it stops a little bit short. But those two factors are interesting, the fact that we have a higher low and then the fact that we have a lower high, because then that essentially creates a descending triangle where if you were to create a level, a bear trend line based off of this swing high and then connect it to this lower high and draw that across, it will actually give us a descending triangle. So let's go back to the live chart, and let's just put that up here real quick and see what that looks like. So let's take this swing high that we have, connect that swing high to this lower high that got created, and then extend that level throughout the market. So if you notice, it pretty much essentially creates a descending triangle for us. Now, when it comes to these descending triangles, a lot of times they lead to a move to the downside, and that's actually what we saw today, where we had a small little move from 500 all the way back to around 460. So in terms of the overall trend, it's not that big of a move, but for a scalper like me, or if you're a scalper yourself, that could have been a great trade for you because that candle stretched about 40 points per se. So it's a lot of opportunity in the market, no matter what side you trade, but it's all about how you view the market and how you look at your setups. Because this higher low setup, like I was telling you guys on Friday on day 30, a lot of the times this will provide you opportunities in both an uptrend and a downtrend. Now, when the trend is moving more so towards the downside, it'll allow you to just get a quick scalp, kind of like what I did today. But in scenarios where the market is clearly defined and a very strong uptrend, you could hold this higher low setup for hundreds of points, if not maybe 2 or 3 hours, because the uptrend will usually start from that first higher low. So you can catch that, it'll be very lucrative. Like, for example, if you come back over here to these higher lows that happen after trade number one, notice how after we made this higher low right here, the market continued up for a good amount of time. So we went from 471 all the way up to 560. So you could have caught about maybe 90 to 89 points just off of that one move by holding it. And if you wanted to, you could have continued to hold that trade throughout the rest of the session and been able to take it up to a high price of around 572. So you could have got your 100 points if you really wanted to. Now that's what I'm working on in terms of, you know, my development as a trader. Right now I'm a scalper because that's what I'm the most comfortable with, but I see the moves that are available and I feel like this strategy could be the basis that I use to maybe expand into that territory where I'm holding my trades for longer periods of time and getting bigger point amounts per trade. So that's the ultimate goal for me, but I just wanted to really touch on the fact that there's multiple ways to trade any type of descending triangle. You can trade it from the bottom based on the level of support, or you can trade it from the top based on the bear trend line where you short each touch of it and take it back to the bottom of the trend line. So it depends on what you prefer as a trader. For me, because I saw that the trend was up for the most part, and the fact that the trend has been up for the past 6 days in a row, I said, okay, I could short the top of the bear trend line, but I'll prefer to just go long at the level of support instead. So let's go back to our notes and let's break down a couple of examples so we can really understand how these markets move, because this scenario that we saw today is not new at all. And I wanted to bring back up this example from May 25th this year and really compare it to what we saw today and see what the similarities and differences are. So this downtrend reversal with a higher low that got established, that's what those acronyms represent. So this is a great example of why a trader must always respect the overall price action at all times. On this particular day, traders had 4 opportunities to go long at each touch of support. But take note of how each retest offers less opportunity than the retest that preceded it. So that's something that's very important to remember for all descending triangles, because this is usually the characteristics that you'll see where you have the ability to go long based off of that higher low strategy, but each attempt is going to give you less of an opportunity than you had from the previous retest. And that's very important to remember, because as a trader on a day like this, you could definitely eat using this strategy. You could catch 1 good trade, 2 good trades, 3 good trades. But eventually you got to understand that more than likely, if it's a descending triangle, you'll probably see prices eventually break back down to the downside. Now, on today's day, we got a little bit lucky because I guess since the overall trend was up, even though we did break the consolidation to the downside, we broke that descending triangle to the downside. Even though that happened, we eventually did bounce back. So always remember that if the trend is strong enough, the uptrend could continue. But more than likely, when you see that setup with that descending triangle, expect for prices to break to the downside and then continue, kind of like they did on May 25th right here. So that's one thing I wanted to point out. And I also wanted to talk about how a lot of the times prices will come back to retest that lowermost wick. So this is an example from May 24th this year. So let's take a look at this real quick. Okay, so notice how we were in an uptrend. The uptrend was very strong. We definitely had our higher lows as well as our bull trend line. So we can definitely say that the trend is up. Now notice how right here we pulled back to create our higher low. But what's interesting is that the close of this candle where that higher low is formed, the close of that body is so far away from that wick. So then you have a decision to make. You say, okay, do I want to get in at the body and potentially take a chance of having prices come back to that lowermost wick? Or do I want to put my order at the lowermost wick and take a potential chance of not seeing prices come all the way back to that level and seeing the uptrend move on without me? So you have a decision to make between those two choices. And really it comes down to the market environment at that time. But what I've learned is that a lot of times that higher low is coming back to get retested. Not only the bodies, but also that lowermost wick. So it depends on what you see as a trader, because there will be some times where, like today, where we looked at today's chart, it bounced off the bodies, made an uptrend, and then came back to retest that wick. So it's so many different possibilities and scenarios and variations for this setup to occur in. But just as a rule of thumb, just remember, more than likely we're coming back to retest those lowermost wicks. So if that's where you want to put your entry, you should feel very confident that you could take a very favorable trade if you're able to get in from those levels. So let's try and find one more level where we see it come all the way back to retest those wicks. Let's see. Okay, here's a good one. This is from May 11th, so it's hard to see, but let's actually zoom in a little bit and take a look at it. So notice how we had swing low right here got established, but then from that point forward we continued higher. Higher low got created, we pushed up to point number 1. We pull all the way back to higher low number 1. Now notice how off of this higher low we bounced from the wick, moved higher. We came all the way back down to retest that wick once more, and throughout that session we came back to test it again at B, and then to test it again at point number 4. So I think on this specific day I was actually going long somewhere around the body, and I think I got stopped out 2 different times before I finally went long on the lowest level of the wick at point number 4, and then that trade actually worked out and became very successful. So always remember that more than likely prices are coming back to test that lowermost wick. You just have to be patient enough to let it come to you and let it form. And you don't have to worry so much about missing the trend, because if you trade from specific levels, sometimes that's just the trade-off that you have to accept. You're getting the best possible prices, but in exchange for that, you're also increasing the chances of you not being able to get into the trade. But I'd rather miss a trade that's going to stop me out than get into a, hold on, am I saying it right? I would much rather take a trade that's going to be very profitable for me if I can get that price, rather than just take the second best price and risk the chance of prices coming all the way back down to the first best price. So always remember that when it comes to trading this setup, you got to be very vigilant and pay attention to what you see in the market, because that wick is very important. Now let's see, I think we have one more thing to cover. Okay, yeah, that's one more thing I wanted to talk about. I wanted to talk about the fact that if we go back to day 30 from July 21st on Friday, where is it? Okay, there we go. I actually ran into the same problem on trade 1 also, where, let's zoom in a little bit. So notice how the higher low right here had its wick get established where the level of support is located. But look at my entry right here. I entered on the blue triangle. So my entry was slightly above the level of support. And that's the reason why prices eventually came back to stop me out at break even, because once I got into the trade, prices did move my way enough to trigger my break even stop. But then they eventually pulled back to come back and retest that lower level of the wick, which eventually had my break even stop get ran through. And after that, we see the momentum continue, and we see prices continue back up to the upside. But look at what would have happened if I would have went long towards the lowest level of that wick. I would have been able to get in towards the lowest prices, and then my break even entry would have never got triggered and would have never got hit, when I would have been able to ride this move probably back to the zone, or if I wanted to hold it, maybe back up to the blue zone above. So that's just a lesson on respecting that lowermost wick, because if you do, you have a very good chance of having a profitable trade like I did today. So before we get out of here, let's just read the notes. I don't think we did that so far. So at trade 1, I just went long during the uptrend after seeing prices come back to retest the support level of the higher low. So that's pretty much the only trade I took today. I wanted to just keep it simple. You know, I've been studying hard all weekend and been making good trades too on the back testing simulator. So when I came in today and I was able to do the same thing, I said, you know what? I feel like I did a great job. In the market, sometimes you don't have to keep pushing and try and make, you know, 5, 6, 7, 8, 9 great trades. If you take that one good trade and you feel satisfied with the work that you did, man, you can walk away. There's nothing in the market that says that you have to stick around and that you have to take this specific trade when you see this setup. If you're happy with what you did, man, go away, come back the next day, study hard that night, and then do it again and run it back on Tuesday. So that's pretty much the plan that I have. I'm coming back tomorrow on July 25th. But before we get out of here, let's just focus on what we need to do in tonight's back testing session. So I would say, even though today was a good day, we still got to remember that good days are only produced by having good practice sessions. So a good practice session means that you're disciplined, you follow your trading plan, you're patient enough to wait for your best setups, and when you see your setups, you execute and you don't hesitate. So those are the main things that I'm trying to focus on tonight going into my back testing session. And with that being said, that's pretty much all I got for you guys today. I appreciate you tuning in. I hope you learned a little bit more about higher lows and that lowermost level wick, as well as those bear trend lines, those descending triangles, and how you can really play both sides, the long side and the short side. So I'll be back tomorrow, July 25th, between 9:30 a.m. and 9:40 a.m. But until then, good people, take it easy.